What if I told you that the next huge money-making machine isn't a bank, an oil company, or even a traditional technology company? It's artificial intelligence. And right now, the AI industry is entering a completely different, intensely physical stage. Because building AI isn't cheap, it requires an entirely new, massive foundation, a staggering infrastructure build-out that demands billions of dollars before any of these investments can generate a return.
But here's the question almost nobody asks. Where is all that money actually going? As hundreds of billions of dollars flow into the space, who gets paid first and who is actually capturing the money?
Recently, a specific figure has been absolutely dominating the financial world. $500 billion. We're talking about plans to mobilize more than $500 billion of third-party capital specifically for AI infrastructure. That is an enormous mobilization of wealth.
Chips, data centers, electricity, financing, cloud companies, AI companies. Who is actually getting rich from the AI boom? Well, once you understand where this money flows, the entire AI economy starts to look very, very different. Let's dive into this explainer and find out.
Section 1. The AI infrastructure boom beyond the chatbot. You know, when most people hear artificial intelligence, they immediately think about ChatGPT, generating AI images, or coding assistants. But behind every single one of those exciting consumer products is something much less glamorous: highly physical infrastructure. AI doesn't just run on magic, right? It runs on incredibly complex computing systems. And to really understand this, we need to talk about compute. In simple terms, compute is just the processing power required to perform calculations and to train or run these AI systems. Think of it like this. In the industrial age, factories needed machines. In the internet age, companies needed servers. In the AI age, companies need massive amounts of compute. Think about it this way. Imagine you want to open a brand new restaurant. Before you can serve your very first customer, you need a building, you need expensive ovens, industrial refrigerators, electricity, and workers. You literally have to spend a fortune before you ever make a dime of profit. AI works in a very similar way. Before an AI company can serve millions of users, it needs an enormous technological kitchen, and that kitchen is incredibly expensive. That's why the AI boom isn't just a software revolution, it is an infrastructure, energy, semiconductor, and finance revolution all rolled into one. Section 2. Enter the chipmakers, the NVIDIA catalyst. Now, here's where things get interesting. At the very center of this infrastructure boom is NVIDIA, because their chips are the gold standard for advanced AI systems. But there's a fascinating shift happening right now. NVIDIA isn't just selling chips anymore. They're becoming deeply connected to Wall Street to help their customers actually afford the massive infrastructure built around those chips. And this brilliantly illustrates where that $500 billion number comes in. But there is a massive misconception we absolutely need to clear up right now. When you hear about this $500 billion initiative, this does not mean NVIDIA is receiving a $500 billion check. Not at all. The reality is that they are building a financial pipeline. The goal here is to mobilize third-party capital from outside investors toward AI compute infrastructure. In August 2026, NVIDIA announced partnerships to create these financing platforms. And just look at the names involved. We're talking about Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR. The absolute heavyweights of the financial system are organizing directly around computing.
But that's only the beginning. Seeing all these massive financial players step in raises an obvious question. Who actually pays for all of this massive upfront cost? Because AI companies need this infrastructure today, but their actual revenues might take years to arrive.
Section 3. The hidden physical supply chain, the secret winners. The ecosystem required to support AI is vast, and many of the biggest financial opportunities actually exist in businesses that you and I will never see as consumers. Let's be honest, most people don't think about where AI actually lives. Well, it lives in data centers. But an AI data center isn't just a normal office building. It requires advanced processors, high-speed networking, specialized cooling systems just to keep the machines from literally melting, massive amounts of real estate, and ultra-reliable power. Essentially, these data centers are extremely valuable pieces of real estate where the tenants aren't people, they are computers. And these computers consume huge resources. But there's something most people miss, a hidden winner here: electricity. If you build more AI data centers, you need significantly more power. This creates a massive wave of opportunity for power producers, grid operators, natural gas suppliers, and even nuclear energy projects. The AI boom is an energy revolution, just as much as it is a tech revolution. So, we have all this hardware, all these massive data centers, and all this power. But where does the money actually end up? And exactly how does it get there? Section 4. Financing the $500 billion. Following the money. And this is where Wall Street enters the picture. Wall Street's role is absolutely critical here. Because building this infrastructure requires so much upfront capital, financing is used to spread those enormous costs across time. It's much like getting a mortgage for a house instead of paying for the whole thing in cash on day one. This creates what we can call the AI money loop. Let's walk through it. Step 1, investors provide the capital. Step 2, financial institutions use that capital to finance the physical infrastructure. Step 3, data centers use that financing to buy equipment. Step 4, chip companies sell their hardware to those data centers. Step 5, cloud and AI companies use that hardware to build their services. And finally, step 6, customers pay for those AI products, which generates the revenue that flows right back to the businesses and investors, starting the whole loop over again.
That sounds like a perfectly oiled machine, right? But there's a catch. What if AI doesn't make enough money? What happens if the eventual consumer revenue cannot actually cover these massive infrastructure bets?
Section 5. The trillion-dollar risk. What could go wrong?
Whenever billions of dollars move into an industry at this kind of extraordinary speed, immense financial risks follow. To put the scale of this bet into perspective, consider this. PIMCO cited consensus estimates that by 2026, capital expenditure by just 5 major hyperscalers, these are the massive cloud giants driving this development, will reach nearly $690 billion. They are making a massive, unprecedented bet to build the infrastructure right now in hopes of capturing the AI demand leader. But this rapid build-out exposes the whole system to 5 very real risks. First up, demand disappointment. What if customers simply don't pay enough for these AI services? Second is rapid technology obsolescence, where today's wildly expensive hardware just becomes outdated tomorrow. Third, energy and power constraints that could physically slow down construction. Fourth is rising debt. In fact, the Bank for International Settlements has specifically issued a warning about the dangerous increase in borrowing being used to fund AI infrastructure. And fifth, falling valuations if investor optimism suddenly fades.
Section 6. Who is getting rich? The sell the shovel strategy. So despite all of these massive risks, we return to our central question. Who is actually getting rich here? Well, the answer lies in the classic sell the shovels strategy. Think back to the California gold rush. Thousands of people rushed in hoping to strike it rich finding gold, but the people who reliably made money were the ones selling the supplies. In the modern AI gold rush, the tools are the chips, the mines are the data centers, the fuel is electricity, the banks provide the capital, and the gold that everyone is chasing is intelligence itself. The infrastructure providers are positioned to win, regardless of which specific AI app or chatbot actually succeeds in the end. So this leaves us with one final provocative thought to take away from all this. As hundreds of billions of dollars flow through this ecosystem, will the shovel sellers, the infrastructure, the energy, and the finance companies ultimately make more money than the AI miners themselves? The story of the $500 billion AI money machine is still being written, but one thing is for sure. If you want to understand the future of AI, you have to follow the infrastructure.